ho, ho! Welcome back to the Fit Finance Sessions Advent Calendar opening. Now, I was tucking into a large glass of port and a couple of mince pies last night when Mrs. Claus said I was looking a little bit overweight and I wanted to be careful because I might fall ill. Tom, tell me, if I do fall ill, is there any policy that I can take out that might cover me?
So the most common one for serious illness or injury is called critical illness. And that policy normally runs alongside a life policy or term assurance, as we were talking about before. And effectively what that policy does is pays out a lump sum if you get diagnosed with a specified illness and you survive 6 months. That might sound a bit onerous, but they're trying to see if you die in that period. Hopefully you've got life cover as well, so that will cover you there. But after 6 months, if you've been diagnosed with a specified illness, you'll get your lump sum in return for the premium.
That sounds very useful. I wasn't planning on being that poorly, though. I thought it might just be that I stumbled on my way to the sleigh and broke my leg and couldn't deliver presents for a month or two. So is there anything that I could do to help me in that position?
Absolutely, yeah. So in which case you would need what's called income protection. And the best way of describing what this cover does is through an analogy which I've heard the last 18 months or so, and I'm quite fond of it really. So imagine that you had a machine in your basement or spare room if you weren't in the US. And this machine, every morning you went down to it and you pressed a button and it suddenly just plopped out with all your change, all your income that you needed for the coming month. And every month you just went down to this machine or next to this machine, where it is in the house, and it just gave you the income that you needed for that upcoming month. You didn't have to do anything. This is great. The question is, would you insure that machine? Obviously, the idea being that the machine is obviously you, and that you're going out to work every day and every month and earning the money for the household. And if it was that case, are you as a machine? Then of course you would. So yeah, income protection is there. It pays out a regular income, normally 60-65% of your earnings. It won't pay out 100% of your earnings, unfortunately, because I think that was the case. We'd have far more people than we'd like to enjoy jumping in front of cars and all that sort of thing to try and claim. But yeah, pay out 60-65% of your earnings up to whatever age you specify, typically 60 or 65, so up to retirement. And it'll pay out after what's called a deferred period. So after a certain amount of time, typically 3 months, but it can be as short as 1 month, then it will just start paying out as long as you couldn't operate your own role in your job.
Until my leg's better.
Yeah. All that.
Fantastic. So I've got one. So if I'm the critical illness that Tom's talking about, if I'm really poorly and I've got cancer or something, and that I get a lump sum for, and then the income protection that you're talking about, which hopefully is for not such a serious condition, and it'll insure my machine, my salary making machine.
That's right. You are
the altruistic Santa Claus that I am. I don't do this for money, of course, so I'm probably not good for that one. Thanks very much for joining us, and until next time, bye-bye.